Welcome back to the floor of the CME Group here in Chicago, March 29th. I'm Killer from Treasury Curve. Treasury Curve is an institutional money market portal. We assist firms in their overnight cash management. Let's look at the trade yesterday, folks. One of the lowest volume days of the year. I really think after this Japan disaster, which happened on March 11th, we saw extreme volatility, some serious trade, and now last week we saw a little bit of a lull, and yesterday it was just a ghost town. Those anemic volumes really are telling that there's a lack of clarity in the market. We've discussed this from the Middle East, lack of clarity, the Japan situation, are we getting real information, the domestic policy here, this Frank Dodd situation, the sovereign debt, as well as the Meredith Whitney municipality situation. But I think the most important thing that we need to look at for a little bit of a situation here is the Fed overstating their hand. You continually have seen the Fed come out and say that they're going to now end QE2. They're going to curtail this QE2 program before June 30th. I don't know if they can do that, but they have to say that. They're selling it all day long, and I really think, go to a Texas holdem tournament, they're going all in, right? And they're taking this, but there are no ramifications for the Fed. If they're wrong and this market comes back down, guess what? QE3, we'll just print out some more money. So I really think the situation here is they're trying to mimic and follow the ECB. ECB is talking about an imminent rate hike. They were talking 50 bips. Some people are talking 100 bips. So I think they're trying to follow lock and step to look like our policy is there, but I don't think this economy is on stable legs. So we're going to see how this goes out. But let me know, comment here on this video or get me at The Killer, who's going to be out of that Texas Hold'em game first, the ECB or Uncle Ben? Let's drill down these treasuries. The big supply this week, and we're seeing a kind of a muted trade here. 120.01 down to up to 120.20, and that 100-day moving average is coming in at 120.19. You can see, obviously, with yesterday's S&P action at 5 minutes to 3 here in Chicago, they sold it off. So I put a little bit of a bid in that treasury market today. Let's talk about these S&Ps. Like 5 minutes before they sold it off yesterday, there was nothing going on. There was no volume. And those HFTs, those high frequency trading systems, rocked it down. And today, at very important levels, is 1299.75. It's the 50-day as well as the weekly pivot. We came down offering two numbers today. We had the Case-Shiller index came out, which was pretty weak number information regarding the housing market. And secondly, we had a confidence number that came out weaker than expected. We rallied off of that, folks. We came down to 13 even and a quarter in the low in the S&P, and currently we're up around 13.11. So I'm not sure if we're just catching some shorts here. We're still looking for more clarity, but this market is up on no volume. That's a clear indication that it's overstated, but it feels like these shorts are going to get caught here above 13.15 in the S&P. In the euro currency, another continued whippy trade. We're seeing a move on the downside from 140.58 as that pivot at 140.58 has kind of been a directional pivot today, and they're really supporting and protecting that 140 even, that $1.40. Yesterday they came down, touched it, and rallied, a full penny and a half. I think that as this ECB clarity comes out, we're going to find out, but under 140, this is going down to 138.73. So from the floor of the CME Group here in Chicago, I'm The Killer. Be careful today. It's low volume. I don't want you to get in trouble, but be ready to put that bazooka on your shoulder at all times. And remember, be the hammer, not the nail.